Hello, I'm Tony Diaz with Graphic Packaging International and President of the Louisiana Forestry Association. Welcome everyone to today's presentation addressing the question, is Louisiana's forest economy ready to grow? This pandemic has forced many changes, which is why we've decided to put on this webinar in partnership with Forisk Consulting. Virtual is okay, but it's not the same as meeting face-to-face, which we very much look forward to. The fellowship we share in the forest products industry, I believe, is like no other industry. Nothing replaces seeing a friend and colleague smile and the warm greeting of a handshake. Many of our colleagues have been generous to provide sponsorships for today's program, and we want to recognize them. They are International Paper, Crosby Land and Resources, Southern Loggers Cooperative, Thayas Grisham Davis and Lee, Weyerhaeuser, Barr Land and Timber, Canfor Southern Pine, Crowell Forest Resources, Despino Tire Service, Malpas Woodlands Group, Packaging Corporation of America, West Rock, Ann and Joey Allen, Trey and Carrie Allen, Bennett Timber, Betty Hughes, Muslow Forestry, Reimers Company, Soterra, Southland Spray Service, and Young Estate. Your help is always essential to the LFA. Thank you for sponsoring this event. Now, I invite Louisiana Logging Council President, Malcolm Sibley, to say a few words. Malcolm?
Hello, I'm Malcolm Sibley with the Louisiana Logging Council, and I would like to welcome you to today's webinar, Is the Louisiana Forest Economy Ready to Grow? Loggers are an important part of our fiber chain, and we want to thank them for working safely during this pandemic. We hope you and your family have remained safe during this time, and we look forward to the time that we can visit with them in person. At this time, I would like to ask Ray Dowdery to introduce today's speaker.
Thank you, Malcolm. I'm Ray Dowdery with West Rock. Unfortunately, we had to cancel this year's meeting because of the COVID-19 pandemic out of an abundance of caution for our members, their spouses, our sponsors, and guests. Today's speaker is no stranger to LFA. Dr. Brooks Mendell is founder, president, and CEO of Forisk Consulting, and he leads the firm's research program. He's a Fulbright scholar who's earned a BS and MS at MIT, his MBA from the University of California at Berkeley, and a doctorate in forest finance at the University of Georgia. Forisk Research Quarterly, published by his organization, provides market analysis, operations research, and timber forecast to senior management and investors in the forest products industry in North America. He's recognized internationally as an industry business advisor, researcher, and as an authority in timberland investing, wood bioenergy, and business communications. And he's found time to write a few books about forestry and the forest products industry. So without further ado, Dr. Brooks Mendell.
Thank you, Ray. And like Tony and Malcolm and you, we all wish we could be doing this together in person one day, enjoying the nice Bloody Marys at an in-person LFA annual convention with Buck. So thank you again for inviting us to host this webinar with you. I want to thank LFA, the Louisiana Logging Council, and also SFI Louisiana, along with you, the participants, and our sponsors again for helping us host this webinar. Heather Clark, who helped set this webinar up and manages our education program, and I, after the session, are also going to be answering questions. So we wanted to share with you how to do that during the time. At the bottom of your screen, there's a Q&A button, and if you have questions for me during the presentation, just go ahead and type them in where it says Q&A, and Heather will filter those for us for the end of the session. And if there are questions that you like in particular or overlap with your thoughts, go ahead and upvote them. That'll help us prioritize the questions as well. Also, we hope that everyone is safe. We've been watching the weather there in Louisiana, so we're thinking of you as well. Let's get started. there's a friend of mine who passed away last year that some of you know. His name was Jim Fendig. Jim was a longtime forest industry executive, and he retired as a vice president at Union Camp. And then he became the executive director of the Wood Supply Research Institute, WSRI. And he also served on the board of directors of Superior Pine Products in Georgia for years. Jim was supportive of me professionally. He mentored me on many things, and he was very supportive of our team. And he had a style in particular that could sort of get the wheels going. He had this way of asking the extra question, a lot like Columbo did. If you ever watched the old TV show, the guy played by Peter Falk, he'd ask one question, like of the criminal, before leaving the room, and it would sort of get the wheels going. But Jim sort of it became a running joke, but he asked the same question. And it was a question when he wanted us to think a little bit harder about ways to maybe increase returns or revenues from timberlands, or when we were having a brainstorm session. And the question he would ask is, well, have you ever considered pine straw? That became his tagline. And in truth, he actually believed in pine straw. It was a good option for a lot of forest owners, but sometimes he just asked the question to get the wheels going. And I'm thinking of Jim today and getting ready for the webinar, and that, that kind of question, it's just a reminder that when we look at Louisiana, or we look at other states in particular, we want to look at the broad landscape. We want to look at all the options and opportunities for generating revenue, what all the growth possibilities are. And so for that reason, I'm going to touch multiple topics today, just so we don't leave anything behind. We don't forget the pine straw. So the plan for today is I'm going to do a brief update on our team, on what's going on here at Forisk, and then I'm going to touch on 5 industry topics. The first is touch on the macro economy and the industry in general, because things are a little bit bizarre right now. Then we're going to touch on pine grade, sawmills, lumber, what the CapEx is doing in that sector generally, especially in the South and specifically in Louisiana. Then we're going to talk a little bit about pine pulpwood, both with respect to OSB and pulp and paper, also generally in North America and specific to Louisiana. We're going to spend a few minutes looking at the supply chain, what's going on in the logging sector and some of the economics there. And then we're going to wrap up by talking about forest management and some of what the outlook might be for forest owners on the investment side. A quick note on our team. We have many folks on the webinar today who are clients of ours, and we're very grateful for the support that you provide to our team and our research. I was going to highlight 3 things. One is every quarter we put out the FRQ, the Forisk Research Quarterly, which has our forecast. And in Q4, the featured research is going to be supply chain. We're doing a case study in the South to look at how COVID has impacted loggers and suppliers and haulers, and just see what the economic implications are there. And a piece of my talk today is going to sort of scratch the surface of that research. Another thing is next month, we're going to be launching the Forest Market Bulletin, which is something that'll be coming out twice a quarter. It's a slim market intelligence product just to keep folks up to date on timberland transactions and mill CapEx. And finally, just like with LFA and many other folks who are hosting events, our annual conference in December this year will also be online, Wood Flows and Cash Flows, on December the 8th. And Heather Clark will be sending out information about that event in the next couple of weeks. Let's talk about the economy. This one keeps me up. It's a weird place to be when we get to serve in an essential sector, forestry, where a lot of things are going quite well. And then we can look around us and maybe talk to our neighbors, and their businesses or their jobs are struggling a little bit more. This figure you're looking at sort of captures a little bit of the 2 sides of that. And then I want to dig in and just highlight on some of the forestry implications and sort of where we sit right now, especially as we start to look forward over the next few months. So there's 4 numbers up here. There's 4 topics. One's the S&P 500, economic growth, unemployment, and then government spending. And I'll tell you, the thing that strikes me in particular is that during the second quarter of this year, after the first quarter hit us so hard, COVID and the recession started, is the S&P 500 increased 20% during the second quarter. During that same time, the economy got smaller. During that same time, the unemployment rate went up. As of July, we had over 30 million people in the United States receiving some sort of unemployment benefit. And during the second quarter, federal spending went through the roof. We went from an annual spending rate in the United States from the feds of $4.9 trillion a year to $9.1 trillion a year, trillion with a T. That means federal spending went up over 80% in the second quarter. So on the one hand, you see headlines about the market doing well, and then you look around the neighborhood and you see people's hours have been reduced or businesses are closing. You drive around town, you see the same thing. It's a mixed message. When you look at the forestry sector, we've been on the good side of the ledger here. You see a lot of homes are being built. There's a strong demand for lumber and solid wood products. And so when I try to tease these things apart and start to look forward a little bit, and you'll hear this theme a little bit today, is the question is this a bump in the road? Is this a pothole where we come out of it? Or is it a sinkhole where we're going to be here for a couple of years? So that's the unanswered question. What we do know is we can look at the facts to the ground for where we are today and what we expect for the next few weeks and the next couple months. And we can look out farther ahead into the future, or we can look out 2 or 3 years from now, and we have a good sense for where we expect to be then. The hard part is connecting the dots between the two, because we don't really know what the economy is going to do after the election and going into next year. One question I have, and one thing that we're watching quite closely when you look at these metrics, is the government spent a ton of money. A lot of it has flowed into the market, and some of it's flowing into these assets. But when I'm looking at the federal spending and the unemployment, there's a couple things going on. One is I'm very interested in where the money went. Did the federal funds go into businesses that employ people and make products and services? And did it go into infrastructure and assets that really generate a return in the economy? Or did it go into other things and disappear? So if those funds went into businesses that produce jobs and produce economic services, we're going to get a return on that federal investment. And if those funds went elsewhere, we won't. We in effect sort of ate our corn seed, so we're watching out for that. The other one is I'm very interested in employment at the large company level. Last month, Caterpillar announced they had a 40% reduction in their global sales across geographies around the world, and including forestry across their sectors. And then you have other businesses like American Airlines, which basically yesterday announced they're going to lay off 19,000 people. So if you have a lot of corporations laying off a lot of people who aren't used to being laid off, those are the people that buy homes and do the home improvement projects. And so we just want to know, are we going to come out of this quick because we have a good story to tell there, that's just a pothole, or do we have something that's going to last for 6 months or longer, which is something where we're going to have to hunker down? Meanwhile, we've had a pretty good story on the forestry side this past quarter. So we're well positioned. If this is short term, we're really well positioned for growth across industries. And if it's longer term, we're better positioned than others, but we're going to be pinching our pennies for a little bit so that we can take off 2 years from now. So let me share with you more details on that picture. When you look at housing, the housing numbers sort of reflect this disparity, sort of this bouncing around in the early part of the year. Housing is such a critical assumption in set of data that we drive a lot of our projections on. They dictate so much of the aggregate demand that when housing numbers bounce around a lot, we start asking a lot of questions because we don't know. We need firm ground. When we came into 2020, we came in expecting a big housing year. We expected about 1.35 million housing starts in our country after we had about 1.25 million last year. That's a nice growth, that's a nice bump, and it was expected to continue into next year. COVID hit, recession hit. We walked into the second quarter, basically April, going from 1.35 to expecting something closer to 1.1 million. During the second quarter, things picked up. Things started to look pretty good. People started buying homes, started doing projects. And so now our number as of now is closer to 1.2 million. So it's a little bit modest, but then in 2021, if you keep this trajectory, you get back to where we were, and essentially you had a delay in the expected growth of a year. So what we want to know is we run multiple scenarios, as you can see on the figure. We're testing a base case where we think things will be, but what if things last a little bit longer? Or what if things get really hot? We like to know what the implications are for the sector. The story right now, and July also had really strong home sales numbers. The story right now is a modest drop from last year, and we pick up where we left off next year. We have evidence of that too when you look specifically at our forest product sector. When you look at what the solid wood guys have been doing around North America after the first quarter, I'm highlighting the lumber side of the business here and the plywood side of the business, both really important sectors to Louisiana. So the dark green bar, that's where we were in April, and the light green bar is where we were in July. What the bars show for the continent is they show how much the operating mills, the mills that were open, at what rate was the operating capacity sort of humming along. In April, after we had a tough February and March, the lumber sector was operating at about 81%, and the plywood sector was operating at about 84, 85%. Then prices got strong. May, June in particular, even since this data came out, prices continue to go up for these products. And by the time you got to the end of June and early July, what you had was the lumber sector, for those mills that were open, so taking closed mills out of the equation, they're running at 99%. Everyone's running as much as they can. And the plywood sector was running at about 96%. Really, really strong performance. And the constraint has been less about mills and has been more about people. With COVID, with safety, it's been hard to add those extra shifts that can get you that extra production. And that's part of the reason we've had some constraints in the supply chain. It's been more a function of people and not a function of getting your hands on the logs, because as all of you know on the webinar, we've got plenty of those, especially in the South. It's been getting everything to the mill, and then at the mill being able to run all the shifts you need. And that story's been a little bit different in different parts of North America. When you look at all the CapEx, this is a map of the US South specific to the softwood lumber sector. And basically there's four ways to add capacity in the sawmill business. One is that you open a closed mill. Two is that you build a new one. Three is that you add capacity to an existing facility. And four is you simply add shifts. Well, adding shifts has been quite a challenge, but you can see all the different colors on the map, and the different colors reflect the fact that we've been opening mills all different ways. In 2019 alone, we had 10 mills that finished capacity expansions, and we had 5 new mills open up. We had one in Louisiana that I'll highlight in a couple slides. You can see it there, it's a blue dot in the middle of the state. So that's been pretty exciting. When you look at all the projects and you look at the pipeline, some of the capital investments did slow down early in the year as people got nervous about COVID and the recession. But some of those projects have been pushed along. If you add everything together, CapEx from last year and this year, 2021 and 2022, you get to a story where the US South has a softwood lumber capacity of about 25 billion board feet, by far the most we've ever had. By far, we're already into uncharted territory in terms of total softwood lumber capacity in the South. And we've got some of the best mills now on the continent. We're using cutting edge technology in these capacity expansions, and the new mills we have being built, they're also cutting edge, top quartile facilities. So it's exciting because it positions those mills to be here for a long time. It puts us sort of at the front edge of what this sector looks like. And as long as the demand's there, we'll be there to serve it. We're going to be low cost producers for a long time. Where's Louisiana on the pine grade side of things? So this table summarizes how much pine grade we use in the South. We use about 98 million tons. This is for the last 4 quarters. So it's a 4-quarter running total. You can see who the big guys are on this chart: Georgia, Alabama, Mississippi, and Arkansas. If you add those 4 states, there's 11 states listed here, they account for almost 60%, about 56, 57% of the softwood grade that we use in the South. Louisiana, you can see I put a box around it, 7.7 million tons a year of pine grade consumption. That's what the last 4 quarters have totaled. A couple things are interesting about Louisiana. One is, in a way, it's actually the most diverse, the most diversified of the states in the South. It's 2/3 lumber and it's 1/3 plywood. We would have been more worried about that 10 years ago as OSB continued to take market share, but plywood's been hunkering down and has really found its place. You can see it in the prices for those panels, and you can see the mills that are left, well capitalized. I'm going to highlight that again in a few slides. We have strong facilities, and the sector we have has been pretty robust, finding its place sort of in the total landscape. If we talk a little bit about some of the specific projects, over 50 CapEx projects that I'd like to just highlight with sawmills in general for the South. I mentioned the different ways that we can add capacity, and you can see examples of all of them here except the adding shifts, which is really the easiest and the softest way to do things. Again, most of the expansions have come through adding capacity to existing facilities, 37 projects. Most of those have been at softwood mills. At hardwood mills, they tend to be smaller projects. We have 13 new mills that have either happened already last year, happening this year, or going to happen in the next couple of years. And we have one mill reopened in Arkansas. On the new mills, the highlight LaSalle Lumber. It's the JV with Hunt. It really opened up December 2018, cranked up in early 2019. It's a big mill, it's a cutting edge facility, and we have several facilities like this around the South. So that's very exciting for us. And again, it makes it harder when these mills open and they get going and they establish themselves. What it does is it prevents capacity and production to go back to where they used to be in other parts of North America. When you look at British Columbia, that's lost so many mills, and the Northwest, which has essentially gotten a little smaller, well, they're not getting it back. That market share is basically here to stay. Look at pine pulpwood consumption. So here you have Louisiana as the top consumer. If you add the top three, Georgia, Louisiana, and Alabama together, they represent well over 40% of the total pine pulpwood consumed in the U.S. South. And pulpwood is over 120 million tons have been consumed the past 4 quarters in the region. Again, Louisiana is a very diversified player here. Strong pulp and paper and also strong OSB. The most diversified state market in the South is Texas, where you can see there's almost an even split between the pulp and paper guys and what the OSB guys are doing. So since they're right next door to you, that affects your market. You have wood flowing back and forth there and those markets overlap. So in essence, you share that diversification. That's part of the region, is the strong play towards the panels. The nice thing with being in the panel business, especially being in the OSB side and having some exposure there, especially where we're sitting now, and this will come up again later, is the long-term housing story. No matter what happens in the short term, the long-term story is good. The medium to long-term story is good. So we're going to need those homes, and having exposure on the panel side, OSB, there's actually room to grow in the OSB sector. You know, if we get back to above a 1.5 million housing start trend over time, we may actually need more OSB capacity. Look at the individual projects. If we look at the capital investments that were made all around North America, just as commentary before we get to this table in particular, what you see is a lot of concentration, for example, in Western Canada, other parts of the continent, in OSB plants. Whereas the South, we're more diversified. So we have a lot of plywood play. You look at just the South for last year, this year, and the next couple of years. I'm just highlighting 10 projects here and a few notes about them. A lot of the action is on the softwood side of the business, and there have been a lot of projects in or near Louisiana, both in OSB and plywood. What's interesting, so you got Martco and you have Boise, both have put CapEx into their mills, or doing it now. And again, the nice thing about that is on the plywood side, Louisiana has such a big exposure to that sector. You see these mills are upgrading and they're here for the long term. So we've had some plywood rationalization. It's basically already happened. And so most of those firms that we have in place, they want to be here for the duration. On this continued theme of the use of pulpwood, I want to highlight a few things about the pulp and paper sector. But normally we used to do a pulp and paper forecast once a year, and we used to use that to drive some of our forecasts. So recently we partnered up with ERA in British Columbia, Kevin Mason and his team, and now they feed us a paper and paperboard forecast each quarter. It lets us be a little more timely. And so I want to highlight a couple things about this outlook. One is that when you look out on a 5-year time horizon for the US and you add all end sectors together, what you see is a little bit of shrinkage in the paper and paperboard sector, about 2.9%. We get a little smaller when you add everything together. But actually, when you dig into the details a little bit, there's a lot to know and there's a lot to look at. One thing is, and you can see it on the figure here, we look at the red line, which is basically where we are, and 2020 hurts. We have some growth, but we also have a lot of adjusting going on. So we're having some shrinkage this year. And when you get past this year, we actually have some net growth over the next 4 years. So what we're going to be doing is making up for some lost ground. So what's happening this year that's so tough? Well, with all the stay-at-home stuff and people not going to the offices, we're not using nearly as much printing and writing paper. So that sector has shrunk quite a bit, and there's not really a big expectation for it to come back. Newsprint, a sector that's been shrinking for a long time, is shrinking even more right now. And so that's also, we were trying to figure that one out. We were talking about it at the office. We're like, well, newspapers, I mean, everyone's home. They're going to get newspapers. But no, that's not what's happening. What's happening is none of us are in hotels where they would leave a newspaper at the front of your door every morning at every hotel around the country. No more USA Todays, no more local papers or Wall Street Journals that are being delivered to Hampton Inns or whatever. So all that newsprint, you just connect the hip bone to the shin bone, you just see, which aren't actually connected. But if you follow those trails, you see that there's a lot of places where newsprint's just not going to be consumed anymore, and there's not a big expectation for those newspaper and those volumes to be coming back. When you look at packaging, that's where we see the growth. You're ordering packages, things are being delivered to your home now. Home products, sanitary products, that's where we see the growth, and that's what brings the sector back over the next 4 years. Pulp and paper has been a sector that's had a tremendous amount of capital investment. This is a picture of the pulp and paper sector. It includes every dot on this map, every circle is a pulp and paper facility that consumes raw wood as part of their raw material mix, either in the form of roundwood or chips. So there are other pulp and paper facilities out there, other paper mills that are using just recycled fiber. So I just want to highlight for a second the guys that just use raw fiber as part of their deal. 172 of these plants in North America. They are a really important sector to our industry. Again, when we were looking at even the volumes consumed in the South, you could see that we consume more pine pulpwood than we do grade, actually, for the last 4 quarters. And we consume a lot of chips and fiber around the place. Of these 172 facilities, 109 of them have had or plan to have some sort of capital investment or capital project between 2019, this year, next year, the year after. Now, people talk about the sawmills, they talk about the panel facilities, but actually the sector that's attracted the most capital in the continent, and also the one that is consuming the most capital in the South, has been the pulp and paper industry. And the projects have been tremendous. A lot of these are conversions. Some are upgrades and improvements, but some of them are conversions of folks getting away from the weaker newsprint and printing and writing papers and converting to package or other products that have stronger markets. Let's talk about the logging sector for a few minutes. So this is a big deal. This is an area of a lot of concern for a lot of folks. And the person who leads our research program, some of you know Dr. Sean Baker, he's our VP of research, and his specialty is really in forest operations, logging, hauling, supply chain. So I want to share with you a piece of his research. He actually just put out a blog today related to safety trends in the logging workforce and the hauling workforce and fellers around the country. And so this is a place close to his heart, and my career also started in wood procurement. So this is something we talk about quite a bit. And I'm going to simplify the logging business a little bit, just for the purposes of this figure and just to share a message, because as many of you know, and as we know, firsthand and secondhand, it's a very difficult business. It's a very challenging and critical part of the supply chain. But just for the purposes of this figure, I'm going to group all logging businesses into 2 buckets. On the one side, we're going to take those logging businesses that have a high percentage of fixed costs. What's that profile? So this is a supplier or a logger that tends to buy new equipment every 3 to 4 years. Most of their employees are salaried, and maybe they have a large, higher volume, maybe even contractual relationships or preferred access to mills where they're moving a lot of volume. So their fixed costs are higher, but they tend to be a little bit bigger, and they tend to have possibly a little more security in moving their volume. And then on the other side, we have guys who are depreciating out their equipment. Maybe they're investing more in used equipment. Maybe their payroll is more based on hourly work or based on production, and they're investing more of their funds into maintenance to keep that equipment running. On average, those firms will tend to be smaller, but they'll tend to be more flexible. So again, we're generalizing a little bit. So the reason we do that is we're trying to answer a particular question. The question is, if COVID and the recession sticks, right? If it hurts us for another quarter or another 6 months or another year, how much pain can the sector absorb? I mean, if you can't move the wood, you can't run the mill, you can't do anything. You don't generate the cash flows you need even to invest back into the acre. So when Sean did here's the thinking. Assume your logging business has a 3% profit margin. And what happens with the high fixed cost businesses, if that business sees its volume drop by 5% on an annualized basis, that's when it hits break even. And if it loses more than 5% of its volume, it's essentially in the red for this exercise. On the firms that have lower levels of fixed costs, that are investing in maintenance and buying used equipment, let's assume their fixed costs are 30% of their business. So they can withstand a 10% decrease in volume on an annualized basis before they hit break even. Is it easy? Is it pleasant? No. But the bottom line is neither approach, whatever the situation, can endure big drops in volume for long periods of time. So when we're thinking about this pothole versus sinkhole scenario, is it a bump in the road? Is it something that's going to last multiple quarters? If we have a scenario where we lose 5, 10, 15% of our volume or demand for multiple months, we're essentially cutting into the meat of the sector. We're cutting into bone. And so that's where we start to worry with some detail and possibly some urgency about the resilience of the logging sector. So we're thinking about those guys, we're thinking about the haulers, and we're watching these volumes by local markets just to see where we are relative to this kind of framework. Meanwhile, on the forestry side of things, people are still investing in the acre. Since 2012, we've been conducting a lot of silviculture research. Every year we do a big survey. Every other year it's the South, and in the off years it's the Pacific Northwest. This slide summarizes some of that data. This year we did the South again. We had 35 firms from across the South that manage or own over 28 million acres. Last year we did the Northwest. We covered another 9 million acres out there. So we're getting close to, we're approaching 37, 38 million acres of coverage. And we're getting a pretty good picture of how folks manage their land, from REITs to TIMOs to small industrial, non-industrial private owners who may work with a large forestry consultant. Forestry consultants also participate in the survey work. And I'll tell you, a couple themes pop out. People ask me, well, no one's replanting. No, it's not true. People are replanting. In fact, not only are they replanting, they tend to replant better seedlings as they move forward in the future. No one's wasting money. I'll tell you that. They are managing intensively. They're managing to meet their objectives, but they're managing for production, and they're managing to maximize their returns, and that story hasn't changed. We don't see even big changes in, let's say, the management strategies. In the South, one thing that we have seen is if you went back, let's see, 6 or 7 years, and you talk to people about what they were doing even before the Great Depression, recession of 2008 or 9, we had a lot more tooth thinning regimes going on. And now we have cases in the South where the rotation lengths have gotten a little bit shorter and folks are doing one thing. But people are fertilizing, herbaceous weed control, good seedlings, and we're growing for grade. People are growing saw timber with the expectation to send those logs from those final harvests to a sawmill or a plywood facility. A couple of final comments, especially with timberland investors and owners in mind. This figure gives us a big picture for North America. It's got 5 regions: the South, the US West, the North, which includes all of the lake states and the mid-Atlantic and New England, Canada West, which is British Columbia and that part of the continent, and then Eastern Canada. A couple things to remind ourselves is, in forestry, we depend really on the long-term demand for wood products, the need for trees, and we depend on demographics. We depend on people. As long as we have the people that want and need products made out of wood, there's going to be a demand for the trees that we grow. We use this wood in all different ways. Housing is critical, as we've talked about today. And when you look at these regions, what's under the bars? It's all the core softwood businesses. What's captured here is the capacity from softwood lumber mills and softwood plywood mills and softwood OSB and wood pellets, and pulp and paper. Number one, the thing that of course stands out to you is the fact that the South is so big and unique among these regions. And if we were to update it for COVID, you'd see some of these sectors would be shrinking. But if what you see today is of the regions, even pre-COVID, the US South alone was growing. So if you're going to be in the forest industry, the place to be is where the trees are and where the people are, and that's where the iron goes, and that's what this figure highlights. When I talk to folks in the industry, and we're talking to a lot of people by phone and by Zoom, just like we're doing now, about how they're managing their businesses, I hear a comforting story from our sector. One is the folks care a lot about their teams and their people. So the reason even earlier on this session, I'm able to talk about the way folks are managing shifts and the way they're doing things differently is because people are adjusting to manage the safety of their teams and to protect their health. They're also managing their cash quite conservatively too, because they are thinking just in case this strong demand and the strong lumber and panel pricing we see now doesn't stick, we're going to be ready next year to ride this out for a little bit. So when I look at our sector and the way we're essentially managing things quite closely and responsibly, that gives me some hope, but it also helps me understand that guys are ready just in case it doesn't last, and then we'll be ready to pick this up where we left off. Before taking questions, one thing I'd like to do is one more time to thank the sponsors from this. We appreciate LFA giving us the chance to share these comments with you. And right now we're going to switch it over and see the questions that you shared and spend the balance of the time working through some of those questions. So one question we have from Will. Will, thanks for your question. Is Louisiana an attractive location for a capital investment in CLT, in engineered wood products? And it can be. I'll tell you where the good places are. I get a lot of questions about CLT. It partly relates to the fact that it's an engineered product. There's a growth potential for it. One thing about CLT is it doesn't represent a new source of pure wood demand, because the CLT is using lumber from lumber manufacturers, but it does represent a source of incremental growth. The key with CLT is you want to be as close as you can to the people who are going to use it for home construction. And so if you put it in Louisiana, the place that you're probably going to feed is you're going to be feeding the housing market, most likely in Texas. And so that's one reason why when we came out of the recession 10, 11, 12 years ago, we saw a lot of early growth in lumber mills and CapEx in places like Arkansas in East Texas, because there's so many housing starts and there's so many people, so much demand from Texas. So that's the key for Louisiana, is are we close enough to that end market to make CLT worthwhile? We have more questions coming in. Yes, Frankie, thank you. I knew someone was going to ask because this question comes up a lot, and I know it's frustrating for landowners. Frankie's question is, finished lumber prices are at all-times high, yet timber prices to private landowners have not gone up. I think Frankie's making an observation, but there is a question in there. So I will talk to this just a smidge. You know, one reason why, the last slide I showed where you see the bars for the South going up in terms of capital investment for the industry is because we have so much wood and so, I mean, we have on the stump right now in the South, and Louisiana's part of the story is we have 30 to 40% more volume of wood and trees than we had prior to 2007, 8, 9. We really accumulated a lot of wood. So that's attracted all this iron right now. So the sawmills got here, they came here, they're getting established, and now the South is the leading softwood lumber producer on the continent and is the leading source of softwood lumber supply to the United States. And so now we got to eat through the wood, and we're just really getting started on that. So we need more growth. The idea with CLT is you eat a little bit more on the margin. We need some time to get this going. So there's always a lag. There's always this lag a little bit with the lumber and with the pricing. The one thing that I point to about from a forest investment side is when I think about it from a forest owner perspective, and it's why we do that silviculture research I shared earlier, is while the prices can be frustrating, right? I understand that. We really want to take a close look at what kind of cash flow are you generating per acre, because the returns from forestry is really a function of volume and a function of price. So it's P times Q, price times quantity, and we're growing way more wood than we used to on a per acre basis. And for many of the timberland investments that I get to visit or review, or when I'm talking to other owners, in certain places in the South, those things basically trade off and the cash flow looks really good. So Louisiana, we may have some catching up to do in parts of the state. As the volume picks up, it helps that cash flow story. And the silviculture investment, the other thing it does is it shortens rotations, so we get that cash flow back sooner. So that cash flow story is really important. But I hear the question on the price, and there is a lag on that. We need those things to tighten up. One thing about Louisiana I will highlight is every year we model the forest supply for every state in the South to see sort of when do we get past the tipping point and things starting to tighten up. And we basically have three groups of states in the South. States that appear like they're going to get to the top and start to come over, just start to balance out a little bit sooner than others. And so where I'm located in Athens, Georgia, so Georgia is one of those states. You see a little bit in South Carolina, but actually parts of Louisiana also fit that story where within a 10-year window, you start to see things level off. And East Texas is also part of that story. So you see different profiles. States that just continue to accumulate wood, Mississippi is a good example of that. We see more questions coming in. So Buck, thank you for your question. We've been getting a lot of questions about this too. He says, Buck asks, do you see any potential for carbon market trading in Louisiana and the South? And I know part of the reason this question came up is there was basically a front page article or a cover story in the Wall Street Journal this week about carbon markets, especially in California. And we've been getting this question a lot. And we keep a pretty loose finger on carbon markets. I'll tell you the challenge with carbon markets is we don't have a strong view on it being a really robust market in the South or in Louisiana in the near term. And the reason is that one is the pricing is quite volatile and liquid. It's unstable right now. So you can't bank on it in a material way in our regions yet. The other reason is that the carbon markets so far are largely state-based. So a lot of it depends on what Louisiana does at a state level for having a carbon registry. So, Georgia has one, but the market is really quite nascent. California was the subject of the story in the Wall Street Journal, partly because they've been doing this for a while. So part of it depends on what the state level regulations are going to be. And they also depend on whether or not we're going to have a sort of a national renewable energy standard. And we don't have one of those right now. It's not the administration when that's going to happen. And actually, no matter what happens in November, it's unclear we would have one in the next 4 years as well. So that would be part of the story too. So we have a question from Nancy. I'm going to read Nancy's question. She asked, my forester said that loggers are limited to how many loads they can take to the mill and that there's been a supply issue. Is this a COVID thing? So Nancy, if I understand the question, it sounds like that the forester you're working with is saying your logger is facing quotas at the mill, and that's possible. We've heard this story in other markets as well, so it's not the only place that this question has come up. We've had it come up in Texas also. We've actually had it come up in Alabama. We've had it come up over here, and a couple of things have happened. In some places where it's been really wet, that hasn't been a problem. But in places where it's been dry, people have been really sort of pushing to get as much volume as they can to the mill because the mills want it, but because it's a good time to move wood. And landowners have been waiting to take advantage of that. And some mills actually filled up on capacity. So that has been one issue. The other is your COVID question is, and I had this conversation with a sawmill manager yesterday. which was he wants to run a third shift and he can't because of COVID. And the reason is that he can't keep enough healthy people safe in the mill at the same time. So they're running their normal 2 shifts, but they're taking 3 shifts worth of people to make that work. And so this gets to your question, which is mills are doing the best they can to keep mills operating safely. And in many cases, it is coming at the expense of a third shift just so that they can keep things staffed. I'll give you another example of this is we have several mills that are being built right now that are being finished. And they could have been finished already, but partly they weren't because of COVID. And the part of the story is when you have the electrical guys there and the plumbers and all, usually you can have everybody on site at the same time and the engineers, but now they've had to spread those guys out. So they have some teams coming in on the day shift and some coming on the night shift, and essentially spreading out the time frame it takes to finish those mills on the CapEx. It's a function of COVID. So that's the reason for it. So this has been affecting several things. So, hey, so we got an anonymous question, which is, when do you think the high lumber prices will trickle down to the raw material? It's similar to the earlier question. It's a tough one because you could always just call the sawmill and say, please pay me more money, right? But they're going to pay what they need to pay. And partly this is purely an economic story. It's a function of supply and demand. We have so much wood and we've been accumulating it for years that we have the situation we have. And we can make up for part of this through volume, but it doesn't make up for everything. So right now, the sawmills are in a good situation. And so they need to eat through some of this inventory to so we can see some tension on the pricing side for on the logging. When we model it out, when we're like, when do we start to expect to see some tension on timber prices and strengthening? We go out a couple of years on this and we see housing starts back at 1.5 million before we see some real tightening of the string. So we have to remember where we are is even though lumber prices are really high, we're actually still building fewer homes than we were last year. And that's because of recession and COVID. So the lumber price itself is one data point. And it's a better reflection of the situation with the supply chain, where we ate up all the lumber inventories in the Q1, and we're sort of making up for that and all the do-it-yourself projects at home. And so if we saw that for multiple quarters, first of all, the sawmills are going to catch up as fast as they can. They're going to get more lumber into the system. And we need to see this for a little bit of time before we see some tension on log pricing. We have another question from Buck. It says, he asks, in terms of growth potential, what do you see with wood pellets versus other forest products? So it's interesting, Buck, thank you for the question. It's interesting, we have a little bit of investment still happening in pellets, and Louisiana has a nice exposure to that business. I mean, Louisiana is pretty diversified on the pulpwood side between the OSB and the bioenergy, primarily pellets, and on the pulp and paper side. So there's a little bit of growth left in pellets, but that thing's sort of capping out. The nice thing is a lot of the upside is really on the solid wood products, on the lumber side and on the plywood side and on the OSB side. That's where the big sort of upside is. And it all ties to demographics and to housing. And that's good because we'd rather be there. I mean, pellets is a low margin business, and we are sort of hooked at the hip to some extent to what Europe and the UK wants from those pellets. We're exporting those guys. So we're exporting pellets out of Louisiana and out of Texas, and they're going overseas. And so if they change their mind and they change their policies, it directly affects us and your market. So I'd rather see the growth in the solid wood products, and that's what we see. And that you see that in the investment taking place now at plywood facilities and sawmills in Louisiana. That's a nice growth story. And so it's nice to see that we're going to be well positioned for that. Gary asked a question. This was another Wall Street Journal article. It placed the blame on lean manufacturing and just-in-time inventory on shortages such as paper towels. What's my opinion of that? I did see that article, and I did have a chance to talk to a couple of reporters, and so that is a piece of the story. I mean, the fact is that, so to me, there's two pieces. That is one piece, is that we have less in the warehouse. There's, firms are putting less money into working capital, and just-in-time inventory is efficient. And there is something to that. That is a part of the story. We got pinched. The other side of the story is actually there's also been a shift. So it was interesting to me. I didn't think about it until someone walked me through it. So for those of you who have used, let's just say, when you buy toilet paper for your house, you buy a different kind of toilet paper than you would if you're buying it for the office. And for those of you who experience that, the different grades of quality, you're buying a cheaper toilet paper for the office. That's what you'd see in big office buildings or big office complexes. And so in reality, there's been a shift that takes place. The same is true for paper towels. Is manufacturers actually had to shift the mix of what they were making from what they normally sold to an office setting and get it right to what would be preferred for a household setting. And so that was part of the shift as well. And there was a delay, and partly because of the just-in-time, that put a pinch in the hose. So that people ate through the inventory, and you needed time to make the shift in the quality and the grades of those products that were going to be consumed by people like all of us who are doing a lot of work from home now. Gary, thanks for that question. I got a couple. I'm going to answer one of William's questions here. We got a question about the prospects for exporting of southern yellow pine from Louisiana and East Texas to international markets as lumber or in the form of other wood products. He's also got a question here about the consolidating smaller tracts of timberland. So first, let's talk about exports, and then we'll come back to the tracts question. I'm going to repeat the question so I'm being clear. William's first question: what are the prospects for exporting southern yellow pine from Louisiana and East Texas as lumber or other wood products? So the prospects are okay. I'll tell you how these markets work, or at least the way that I look at them, because Louisiana, East Texas, you're exporting pellets, so you're in the export business already. For us, and us being like the U.S. market and the U.S. South, so we're in this market together. Market A, market number one is the domestic market. So to the extent that we need the lumber and the products here, we consume them here. And so you see that in the high lumber prices. I mean, that price is not a function of export demand. That's a function of domestic demand. We need it here and we need it now. And so what you see too is when lumber and panel prices go up or log prices go up, if we have any export flow, what essentially is happening is if there's export flow, we're buying that volume out of the export and using it here at home. So the domestic market is A and 1 on our list of priorities, and they are where most of the value is created. To the extent that we could move some volume, it's possible. We do have a little bit, we have a 1 billion board foot export market from the South on lumber, and we have had some log flow, but it hasn't been a big growth industry for us. For us in the South, the growth industry is here. It's like, let's get the 1.5 million homes, because on the margin, where's that extra 2x4 going to come from anywhere in North America to make a home that we could reach? It's going to come from the South. And so that's where our growth potential is. And it's like sitting right in front of us. That's why I'm very interested in this pothole versus speed. Is it just big or little? But whatever it is, let's get past it, because we're really well positioned to grow here. William, you had a second question. Is there a near-term trend towards consolidating timberlands in the 200 to 750 acre range per tract through acquisition for harvesting or carbon credits? I can't speak to that much. I do talk to a lot of individual non-industrial private owners who are interested in buying tracts of that size, and they're not in the consolidation business. Maybe it's their first tract or their second. And I do talk to timberland investors or TIMOs and others who, the size of those tracts are a little bit below the space that they plan. They buy them if they're contiguous to properties they already own, or if it's easy, or if it makes sense for them to do that. You see those transactions taking place. We haven't seen in the South folks so far doing a lot of that to build up new large properties, but it's something we're watching. So one thing related to your question that we have seen recently is we have seen a lot more properties come to the market or being teed up. by REITs, by TIMOs, and by some brokers. So actually the deal flow looks like it's picking up again. And that's something we're now tracking more closely. And so there are folks that are bringing acres to the market. So it's possible that it's responding to things like your question and those kinds of opportunities. So we'll be on the lookout for that. We haven't seen it yet directly. I had a question from Keith. Is the reduction of hardwood pulpwood market a result in the print and paper needs? Yeah, it's that is a big piece of it. Is actually the mix has changed quite a bit on the fiber going to pulp and paper mills, and you know, just to give a little bit of history there, you know, as the South has been harvesting natural forests and converting them to pine plantations, our hardwood pulpwood supply has been shrinking a little bit, especially that coming from the most operable acres. So it's been a little harder to get our hands on hardwood pulpwood, and you've seen mills convert to that. So basically, as a sector, we've seen mills convert more to consuming pine than they have been to consuming hardwood. So it is a function of demand, and that demand has changed in response partly because the supply story has been different. And that's been a couple decades in the making. We're going to take one more question. And I have a question from John about any thoughts about federal assistance for loggers. And I'll answer that question broadly. You know, I know loggers who have taken advantage of the PPP program. I know that's been a challenging program for some businesses to access, because in the beginning, it seemed to be geared more easily towards larger businesses, but for loggers, especially for those with local banking relationships, hopefully that thing has worked out. For additional assistance, I don't know the answer to that. I do know that the logging sector is extremely critical, right, to what we do. And so that's one of the reasons we spend a lot of time tracking it. We're very interested in the economics of your businesses and how the logging sector is doing. So we're digging into that from a research side. And to the extent that research, like the kind of stuff that we work on or that LFA works on, you know, if there's something there that can help support the sector, and if that results in funding that can be useful, we'd love to see that. We'd love to see that take place. I want to just thank you on behalf of LFA, the Logging Council, Louisiana Logging Council, SFI Louisiana. And again, thank you to the sponsors and to all of you in your time for participating and for sharing your questions. Please stay safe in Louisiana, and we hope you have a great rest of the day and an extremely successful rest of the year.